Hey, good morning. It is February 23rd, Tuesday morning, 6:06 a.m. And crude is on a bid right now. We've got the weekly daily 60-15 all green. And take a look at where we are. This was yesterday, just very flat, could not go anywhere. We retraced quite a bit down to the previous day's high that I thought we might revisit and bounced. That was yesterday's 78.6 on the default 24/7 data speed. So this would indicate that we're going to range today. So we'll probably get back into our little bitty tiny, very, very small 25% value. And we could possibly get up to yesterday high. But I would imagine that we're just going to bounce sideways, even though we've got an upward bias right now. That's because the retracement was just too deep to rally this much further up. We potentially, I guess, could get to yesterday 127, but that would be about it. Um, according to Fibonacci, that's not to say that some great news could come out. We've got, I think, new home sales and some sentiment news today. Let's take a look at the charts real quick. The rules and disclosures are on the website. Futures trading contains substantial risk and is not for every investor. Past performance is not indicative of future results, and no representation that your account will likely achieve profits or losses similar to those shown. Please review those. On the calendar today, on Tuesday the 23rd, and let's put this on Chicago time. Oops. That one. We've got consumer confidence and existing home sales coming up at 9 a.m. Central. So if that consumer confidence number is expected to be lower, let's check out the history. So if this drops down lower, then we're going to be in trouble. And I guess new home sales are expecting a lower read also. So that could derail this uptick in the price. But right now we're moving up to our highs. So here's our body of price action yesterday. I would expect that we're going to get back up in here to test this. And it just depends on whether we're going to turn around when we get to the bottom of this and how far back down, because like I said, we retraced so much further overnight that I would expect to see some sideways price action coming out of this. How to trade this on your lower time frame? Just wait until you get a retracement, or take a trend after a doji, which is a trend continuation signal. And I like to use measured moves. So I would expect to see a measured move up to this area. So you could probably get a few ticks, a few points out of this. But I always find it hard to jump into the middle of a trend that's already started. So given the nature of today's price action, that I think it's going to be ranging, I might wait for a retracement and another push up to get involved. Because I will be trading long as this is weekly daily 60-15 is going higher and see if we can get it pushed up and out of this range box. But I don't think it's going to go much, I don't think it's going to go very far because of the depth of that retracement. And see if we can get through this point of control from yesterday, which is sitting at 1939. Again, our composite point of control and VWAP are very low. So we might plateau at this Keltner band, and we have divergence on our momentum currently right now. So I'd probably see a 1939 retracement back down to 1906, down to this bottom Keltner channel and this high volume node. And then it won't be long before it just crashes down to come and get these. That's just my opinion. Currently, that's not what the charts are saying. Weekly, daily, 60, 15 are all green. So that's the beauty of Bloodhound. It's not what I think. I've got to look and see what this is saying. And this is saying to go long and to stay long, despite the divergence, despite the low point of control, despite the low composite VWAP. The overall higher time frame trend is telling me to stay long. So it could be a choppy long day and difficult trading day for me. I think it might be easier to trade the pound today, the British pound, and just continue shorting that. Let's see if that gets back some price action from yesterday's sell-off, and continue short as England considers whether it's going to exit the euro, because it doesn't want to pay for all of that negative yields that are happening over there. So I guess that will create a world war with Germany and England, huh? So here is something interesting that I look at. I just thought I would share this with you. This is a 1-minute chart with a Heikin-Ashi overlay, so it smooths it out. Heikin-Ashi just means average, and it takes an average of the candles and smooths it so that you can stay with the trend easier. But with the Heikin-Ashi overlay, this is a 30-minute MP lines. I've got it set on 30-minute, and I don't show a RTH session, so each 30-minute will have its own candle as far as its own 25% value area, which is what I like to trade. And here's why I like to trade that 25% value area. As you can see, it really contains price, and if price is going to be trading above, below, or on it. If it's on it, it's flat, and there's nothing doing with those trades. And you can see when price breaks above or below those areas, because I have my 5-minute opening range on this 30-minute profile, these mini profiles with the 5-minute opening range on the 30-minute profiles. So when it breaks out of that range, that's when you know that you can get short. You have your previous point of control on red, so you know that you want to stay short. And I just think it's a really cool way to look at price action. Many ways to slice and dice this indicator up. And when you get a retracement that does a 1-2 out of this box, this 25% range box, you know you've got a change in trend. So these are very good to find. These little zigzag moves out of the 25% range box. And of course, your momentum works real well on a 1-minute chart. Definitely trade in the direction of your momentum on a candle change from red to white, red to green. I use white for the black background, obviously. Easier on the eyes. But very cool on these MP lines indicators. You can, oops. You can change these to any minute you want. You can make them a 60-minute, an hourly bar if 30 minutes is too much, and maybe use a 15-minute open and close, or you can stay with your 5-minute. I've got right now, let's see, what have I got? Oh, oops, no wonder. Put that back on a 5-minute. So there's lots of ways that you can create your little profiles to trade intraday and to get a feeling of what price action is doing. And as you see right now, we're trying to break above and out of this range again. Overnight, we came down. And now we're moving back up, trying to break out of this range. And there it goes. So play with your indicators. Use your tools. I love this momentum because it keeps me recognizing that this could probably fail. Once it breaks out, it'll probably come back in because of the momentum divergence. And recognize that price spends more time going sideways than it does moving up. But once it gets in a trajectory, for direction, trade that trend line. Every time that there's a retracement to that trend line, take the trade. So the trade would have been a break above this line here, and there would have been 2 points. Until the trend breaks, and then you wait for your retracement. So use your tools. That's what we have these fancy indicators for. And put this back on a daily so that you can see what the difference is. And here we go. Here's yesterday's 25% value, and that's where it's going. And the point of control, 1939. But here's our retracement a little bit for the failure on that 1 minute divergence. Amazing, isn't it? Pretty amazing. Probably come back and check this one more time for our trend line before getting up there. Pretty amazing. Look at that. Not bad for 1 minute divergence, huh? Okay, well, y'all be good, and I will see you tomorrow. Thank you so much.